Me now is Nick Cherney, the Chief Investment Officer of VelocityShares. Nick, good to see you. Thanks for joining us here on Street Smart. So you had a great quarter in your VIX, one of the VIX-related products that you have that's actually levered to the VIX, up over 400% for the quarter. Do you have any view, though, on where you expect volatility to go over the next quarter, over the next year?
I think there's a lot of investors who saw the spike in VIX, particularly in August, and viewed that as an opportunity to get in and initiate some short volatility positions. One of the things that we find ourselves sort of focusing on with investors, though, is that often when you see a volatility shock as large as the one we're going through, historically it's persisted for quite a while. So we're only about 2.5 months into this shock. And in 2008, the shock lasted closer to 6 months. So while we don't make calls on the direction of volatility, it's certainly, not a safe bet that we're going to see vol decline rapidly in the near future.
And are investors using your products as a way to sort of hedge or a way to sort of allocate some of the money they've had maybe sitting on the sidelines at this point? You've seen a big uptick in volume.
Yeah, so we talk to a wide range of investors. We have, 6 different products out there that allow people to express views, both long and short, different maturities of the VIX futures. But I would say that the largest constituency is really people looking for tail risk hedging solutions. Particularly post-2008, I think a lot of investors became somewhat disillusioned with a pure asset allocation approach to investing. And maybe they're not ready to rely 100% on active managers to solve that problem for them. And so that really leads you towards the need for a hedging solution. And that's sort of a pretty challenging thing to accomplish. And the VIX futures are definitely an area that have had some success in that regard.
Now, one of the other products you offer is an inversely correlated product, right? So that if you actually think volatility is going to fall, you have a way for investors to get exposure, to get some upside from the downside, if you will, on the VIX. But you have a larger fund family now that you're developing. You have products now based on commodities that have yet to be offered.
Yeah, we're focused on providing products for the institutional marketplace, trading instruments, sophisticated products, and sort of the natural evolution as we brought out all these VIX products has been a real demand from the clients that we talk to provide more tools in the precious metals space.
All right, I do want to get into that a little bit more, what specifically within the precious metal spaces you're going to look at. We do have to go to break, though. Let's talk about some of the other products. Why the commodities space? Are you seeing demand from clients?
Yeah, so we focus entirely on the institutional marketplace. We deal solely with institutional investors, large hedge funds, multifamily offices, those types of sophisticated investors. And one of the reasons that they look to VIX is that in times of stress, like we're dealing with right now, correlations have typically gone very high, and they sort of converge on one. And the VIX is a great way to get an inversely correlated instrument. But one of the other effects in those kinds of markets is that people are really having to call the macro trend a lot more aggressively than they would typically, and precious metals is sort of a historically traditional place to go to do that and to sort of express macro views. And there's frankly just a lack of some of the more sophisticated products that are available right now in the U.S.
And the notion of tail funds or tail hedging funds, black swan funds, I call them, it seems to have become much more popular now, or it seems to be a growing field overall. What specifically are clients asking you for right now? So obviously, commodities are a great way to play macro themes, but what about currencies? What about fixed income? What about stocks outside the U.S.?
Yeah, I mean, I think a large portion of the people that we talk to are looking at listed exchange-traded products as an alternative to those funds. So, that area has grown dramatically post-2008, but a lot of it is fairly opaque. What you've seen in VIX futures is they've grown from $50 million of trading in early 2009 when these products first launched. Now, in the last few months, we've seen multiple days where over $5 billion traded on the New York Stock Exchange. So it's very liquid, it's very transparent. And what we do is help institutional investors sort of navigate that landscape, understand how they can put together tail risk strategies in a listed format that mitigate cost, which is really what a tail risk fund is about. It's figuring out how to get a cost-effective hedge. Any investor can sort of go out there and roll puts, but the cost of doing that often is damaging to a portfolio.
All right, Nick, we got to leave it there. A pleasure to talk to you. Thanks for coming on Street Smart.
Thanks a lot.
That was Nick Cherney, co-founder, Chief Investment Officer of VelocityShares. Okay.